We appreciate you guys being here. I'm going to go through just a couple of quick slides for you. This is important, obviously. With any type of trading, there's risk involved, and so you've got to understand that. The guys speaking today, they're not making trade recommendations. They're not telling you where to buy or where to sell. They're just showing you what they're doing in their accounts and their own analysis. You have to be the one that makes the decision whether or not the risk or trade idea or the contract traded is appropriate for you. As always, past performance does not always equal future results. We've got Darrell Martin about to speak, and he does an excellent job. If Darrell has a good trade today, that doesn't mean that Darrell never loses in the market. Everybody loses, it's part of it. So again, kind of what you see is what you get here today. Number two, we're not English majors. We don't have any English majors scheduled to speak today, so if one of the speakers, or if we misspeak, or if we have a typo, or we have bad punctuation, just roll with it. Hopefully you guys picked up on a little typo in that sentence there. So, and then number three, this was a recent one our legal department asked us to add. We can neither confirm nor deny that the NSA is not watching you watching this webinar. So, all right, Ashley's going to be the translator. Very good, very cool. So again, three quick disclaimers. If you want to stay up to date with us, our websites, we have two websites, www.tradingpub.com and then www.marketdeal.com. TradingPub.com's free educational website. MarketDeal.com, think of it kind of like a Groupon for trading, but everything's 100% off. So again, everything's free at Market Deal as well. For those of you that are in the Twitter sphere, you can follow us at twitter.com/tradingpub. And on Facebook, you can like us at facebook.com/tradingpub. So again, you might notice a theme that basically our links end in /tradingpub. Rules of the road, we're very laid back. The only thing we ask, these guys are taking time out of their trading day to be here. I know Darrell's getting up early to be with us to do some planning. If for some reason one of the guys is talking about something that is not the most earth-shattering, interesting thing to you personally, don't be the guy on the left. Don't be rude. We don't want to have any hecklers in here today. If you are rude, we'll just simply ask you to stop typing in. But if you're going to be here, be cool. We rarely have an issue with this. You guys are a great crowd. But again, that's just one quick little thing that we do. And then the final notes before I turn things over to Darrell, some of the free education at the Trading Pub is sponsored by Nadex.com. For those of you, we've got a link in here, which is our free Nadex library. If you enjoy these free events, I would recommend you taking advantage of this. Let the guys at Nadex know that you appreciate their partnership with Trading Pub, and the other educators like Darrell that are on here today. Thank them and be appreciative for them taking the time to be here today. So Darrell, at this time, I will turn things over to you. I know you are going to get your screen sharing going. But again, Darrell has won multiple trading championships, trading live money in front of a crowd. He's been a speaker at Trading Pub multiple times, and we really appreciate
All right, let's see here. So it's connecting right now. You ought to be able to see my monitor at this moment. Excellent. Well, good morning, everybody, and welcome to the Trading Pub Marathon. So let's go ahead and kick it off. And so really appreciate, like I said, we're talking about Nadex sponsoring the event. So we're going to actually teach you a little bit about Nadex, just in case you don't know. And there's a lot of cool things coming on Nadex. One of those is we're looking for Nadex to hopefully, of course, I'm not speaking on behalf of Nadex, but hopefully be available actually to international residents as well next month. So as long as everything stays on track, then that'll be good. Of course, it got delayed a little bit. You can imagine all the fun government shutdowns can delay anything in the regulatory world. But looks like everything's looking good so far, as I know, and ought to be available. So let's get into it and talk about Nadex. So we have the normal risk disclaimers, etc. Trading is your own risk. And yeah, and by the way, one of the things you can do, and we'll talk about where to get these links, but actually, if you just use that link that Morgan gave you at the beginning, you can get a demo account right now, even if you're not a U.S. citizen, if you're not a U.S. resident. So hop over there and go ahead and get that. Start learning right now while you can, because it's a great time to be hopping in and learning about how to trade Nadex and how it works and how to put it together. while it's there's no risk to you. So, all right. So I'm going to talk to you a little bit this morning about Nadex spreads. There's also Nadex binaries. I teach a lot of strategies on both. And when you hear the word binary, especially if you're not from the U.S., you hear something that probably you may have some curse words along with that. Nadex is awesome. They're completely different. So they're exchange-based. They're not trading against you. You can get in and out before expiration. You can do higher probability trades by doing trades that are known as in the money versus everything just being at the money. But today we're going to focus a little bit on the spreads because a lot of you are, your futures traders, your forex traders, maybe some stock traders and option traders. What kind of traders do we have in the room right now? Futures traders, forex traders, what kind of traders do we have? So I guess a lot of FX traders. Okay, excellent. Futures traders. It's like a lot of FX and futures. Stock options. Okay. Awesome. Well, this is going to give you more leverage than stock, more leverage than futures, more leverage than Forex, but it's also going to cap your risk. So let's go ahead and get into it. By the way, what I'm teaching you today applies to everything on Nadex. So it's a really simple thing. But one of the examples I like to give is, let's say you're going in and you're trading the pound, okay? And you're looking at the market going down, going south right here, and you go, okay, this looks like a good the solid support line. It's going to keep moving down. I think it's going to probably head about to this point. Comes on down here, and you're trying to have, you think at least at that point, maybe much further. And so with this, you're going to go in and put a stop or a stop loss, above the market up here. And so you go and you sell, at one lot, which is 100,000 units of currency. And the demo account's the same for everybody. So if you actually fill in that link for Morgan, let's have the whole Nadex library. It doesn't matter if you're a foreigner or not. For the demo account, just fill out that demo link and you can get it activated. You can even get it extended. So I'll show you how to do that too a little bit later. So right here, you're going to go short. And your risk is $650. Your margin's a little over $3,000 to be able to, take this trade. And bam! Anybody ever have that happen? Right? You get in, and this is painful. But then it starts going up, 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 and I mean you're just literally dying all the way up. And you're having to make a decision. What do I do? Do I get in again and go short? Do I maybe do I go long? And then watch it go in my right direction. Do I stay out and watch it go in the right direction and miss out on the profit? You have to deal with all of these issues whenever you're trading. But then that happens, which is a lot more painful. So who has experienced this any time in the last week? Because if you traded live in the last week, you've definitely experienced this because the market's been flying up and down with every little news thing that comes out of DC. Okay? Well, with Nadex spreads, you actually don't have to ever experience this again. There's different ways to use them, especially if you combine them or one at a time. But I'm going to show you how the spreads work and how you could actually do this exact same trade with the exact same analysis, but not got stopped out on your trade. Would that benefit any of you? And especially in markets where DC decides to pop out every 5 minutes and talk. Cool. All right. So again, same trade, but we're going to do less risk, and we don't have to get stopped out, and we don't have to take on more risk. So one of the things I want to make sure you understand is there's a few things you need to know to really start making money. Another thing is I want to teach you how to reduce your risk and have either stops that are further away or not have them at all. And we're going to go into maybe some other strategies as well, depending upon how much time we have. Okay? So I have a radio show every day. You can call in on that if you have more questions. Also, I have a trading forum where you can hop in there and you can post all the questions you want. It's free. So if you get that link from Morgan, then he will set you up on that. But definitely write down, take some notes, and don't be overwhelmed because a lot of this information is new. Okay? To make money in trading, there are 3 things that you need to learn. So one, you have to reduce your risk. It's sort of obvious, but we all know, or the longer you've traded, the more you know that risk management is everything. So the more you can reduce your risk, then the better off you're going to be in trading. The next thing is you want to increase your leverage. Okay? So you want to get that leverage as high as possible, but while maintaining reduced risk. And an increased leverage, if you don't know, what that means is when the market moves, a penny, you're making $10 or $20 or $100 or whatever. It's really increasing that leverage dramatically, or at least $1, right? 100 to 1. And you need more time to be right. Meaning, like we saw earlier, where on that trade example, you were right. It did go down. Right back here, right? You were right. Just you didn't have time to be right because you got stopped out before you were right. So you want to add those three things together, and you want make sure you're focusing on those things. How do I reduce my risk? How do I increase my leverage? How do I have more time to be right? So that's just a few of the things that you want to start out with. We have a link that's going to have videos in detail and like 15-minute videos that break everything down for you. Fill in the form, check your email. We've got TradingPub.com, I believe, /Apex. We also have Apex.com / pub. So you can use either one of those links and they'll get you there, but you definitely want to go to that link to get you going, okay? Get you the step-by-step videos. And we also teach you how to trade. This is just how to trade with this instrument, okay? So we're going to talk about Nadex spreads. And on Nadex spreads, they're a contract that allow you to trade an underlying market with limited risk. Yeah, I think they got backwards there. Underlying market with limited risk. They don't have all the complexities that Greeks and call and put options, okay? So the reason is because they're 23-hour contracts at most. Now, they may be like 2 hours because they have new ones that come out every hour, but they're 23 hours at most. And basically, it's just I buy if I think it's going to go up, I sell if I think it's going to go down. Okay, it's simple, just like anything else that you're trading. And Nadex, they have called them bull spreads. They're moving towards just calling them Nadex spreads, which is a lot more accurate because if you buy them, they're bullish. If you sell them, they're bearish. And I call them a box spread because I call them Nadex spreads, but I also call them box spreads because they look like a box if you put them on a chart. Real quick, for those who do trade things like stocks and forex and futures, I want to go through leverage just to show you how big the margin is. So when you're doing margin on securities, you're either putting up cash margin, which is the full amount, or Reg T margin, which means you could put $50 for $100 stock. Maybe you have day trading margin, you get a little bit better leverage. If you're doing futures, you got initial margin, maintenance margin, day trading margin, and then you may have, depending upon your broker, you could be limited on day trading cash market hours. So if you're going in, you're trading forex, maybe you have 400 to 1 if you're outside the U.S. If you're inside the U.S., you're capped at 50 to 1 at most. Some even have less than that. So your leverage could be pretty low on forex as well. So there's a lot of risk as well with that leverage, right? Because margin is just how much money you put up, and it's not what your actual risk is. Whereas when you trade on Nadex, margin and risk are the same thing. So forex and futures, margin and risk are not the same thing. Same thing with stocks and regular options. They could, depending upon the option strategy. But anyway, so understand that. And again, Nadex is not currently available for live trading outside the U.S., but it should be hopefully by the end of next month. And you can get a demo trading account right now, even if you're not inside the U.S. So I would definitely get that right away so you can start learning how to trade it as it is going to become available soon. Obviously, the margin and the leverage on whatever you're trading will vary based on your account size. I have an example here showing the amount of money putting up. So what I did is I went and I took a 6E futures contract. The minimum size was 125,000 units of currency. And then I equalized an ETF, the spot FX. I went in, options on the CME there, and I did the euro-dollar Nadex spread. And you can see a massive difference. Look at the margin. $31,000 if you had day trading margin. $31,000 to trade the FX euro-dollar ETF. $3,000 for the spot. $500 depending upon your broker for the futures. $2,500 for the options. Okay. $250 for the Nadex spread. Okay. So $250 again for the Nadex spread. That's all you're putting up to control that same amount, have that same buying power. And by the way, your risk is $250. So I did basically a move up and a move down to show you how much would you make or lose on each one. And you got about a $3,000 profit versus a $3,100 loss. $3,000, $3,100, $3,000, $3,100. Over here on the futures, future options, you only made $463 because you're going with all those Greeks, your gamma and your delta and everything else, and $1,250 on that same move down. Over here on the Nadex spread, 28.75. So very similar profit. You're getting up a little bit because there's a little bit of option in there, but it's only, there's only a day or less. And then your risk is still capped at 250. So hopefully, I don't know how much you know about margin, but what this is showing you is you're definitely increasing your leverage while capping your risk. Your risk is much lower on a massive move. You're still getting most of that profit on the up move, and you have massive margin. We're looking at 500 to 1 right here. I've actually put up trades that are like $10 to control 10,000 units of currency, and that's not an abnormal thing. Happens all the time. Nadex is an exchange. All the products are capped risk. What does an exchange mean? An exchange means they're not on the other side of the trade. Okay? It means if you win, they're like, great. It means if you lose, they're like, great. Basically what it means is they're impartial. Okay? They're there to facilitate a transaction between a buyer and a seller. Okay? That's it. And you want to trade like that. You don't want to trade over-the-counter stuff because the guy on the other side often is trading against you, or there's other issues on liquidity, and you don't have the anonymity. You want to trade on an exchange, is where you want to trade. Even when I trade futures myself, I trade them on the exchange. I don't trade spot FX because of all the games that spot FX traders do. So they don't have bonds yet. So they're adding in products. I'm actually going to go through all the different the different markets that they do have available. The biggest thing is you can't lose more than you put up in that margin. The risk and the margin are the same, but you still get the massive leverage. You can trade the major stock indices, and you can trade future commodities, forex pairs. So there's plenty of markets that you can trade. On stock indices, you got the S&P, you got the Dow, you have the Russell, you're going to have the Nasdaq, you're also going to have the FTSE, the Nikkei, and you're going to have, let's see, what's the other one? Oh, and the DAX. And so on commodities, you got oil, you have natural gas, gold, silver, copper, corn, soybeans. On forex, they have just a whole handful of forex pairs: Aussie dollar, pound dollar, euro dollar, euro yen, pound yen, US yen, dollar CAD, dollar franc. They're adding in Aussie yen, and they're adding in euro pound now. That's in progress. So it's already on the demo on Nadex on the binaries. They'll be adding it pretty soon to live spreads and binaries. They keep adding markets. So a lot of markets that it's available. So price is driven on these by the underlying market. It's not driven by supply and demand of the spread. So market makers and other traders, they're making the market, but it's going to be based 100% on where the market is moving. If you think about it, when you buy a call, there is real value, and then there's some time premium in there. And if the market, if that call was $10 in the money, then there's going to be at least $10 of value there. It's driven by the market, but again, much simpler than calls and puts and all that stuff. Everything moves in pips, or ticks, however you want to call it. If you don't know what a pip or a tick is, if you trade stocks, you know what a cent is. Okay, a stock is moving in a cent. A cent is 1 penny. That's the minimum increment move. Okay, and on Nadex, the minimum increment move is either called a tick or a pip. Like on futures, we call it ticks. On forex, we call it pips. But here's the big difference. Okay, the big difference on Nadex is every instrument on all the spreads ticks in the increment of 1. You don't have to deal with quarters and eighths of cents and all that stuff. And when I say 1, I mean either 1 or 0.1 or 0.01 or 0.0001, but it always takes an increment of 1, and every tick is always worth $1. Okay? Always worth $1. So what does that mean? That means when you're doing like pound yen, you're not converting back to USD. Okay, because every tick is worth $1. That means on the S&P, it's going to take in 0.1 instead of quarters. You don't have to worry about this tick's worth 12.50, this tick's worth this tick's worth that. Every tick is always worth $1. Okay? And on every spread, you have what's called a floor and a ceiling. And this helps cap your risk. It also caps your profit, but they're wide enough that you really don't care, unless you're somebody who's going in and taking out 150 pips on a regular basis in the market, then you'll be just fine. So an example here on the euro dollar. Let's say you have a floor and a ceiling of 2,400 and 2,500. Okay? And these are automatically set. There's a spread, which is a difference between the floor and the ceiling. So the difference there is what? What's the difference between 2,500 and 2,400? Pretty simple, but FX traders out there, who can tell me what that difference is? What do we got? We got 5 ticks, 100 ticks, 10 ticks. Make sure he's awake this morning, start doing their math. There we go, Kevin. Good job, man. So 100 pips. That's the difference. That's the spread. Okay, so where the word spread comes from. So that's sort of like throwing you off. You're like, I'm used to futures or forwards. What's the spread stuff? It just means the difference between the floor and the ceiling. Okay? And remember, every tick is worth $1, and the last pip is the tick. So right here we got, 1 is the last digit right there. So 2,400 minus 25, or 2,500 minus 2,400 is 100 picks. And since every pip is worth $1, then it's a $100 spread. Okay? Now, you can't make, if you're selling the spread, you can't lose any money above the ceiling. You can't get stopped out. And I need to add in a word here that says can't make money below the floor. That's not completely accurate. You can't make any additional money below the floor. Okay? So you could go in and you could sell another spread, but your profit is going to be capped out. The cool thing is you could sell here, it could go up, and you're not stopped out. Comes down, you can close it out. Comes back up, you can sell and buy it back. You can also buy and then sell back higher. Okay? So sell at $24.90. If I sold at $24.90 and I can't lose any money above the ceiling, and you know now that every tick is worth $1, what is my risk on the trade? If I sell at $24.90 and the ceiling is $2,500. $10. So exactly 10. Yeah, 10 would be the correct answer there. So good job. So I have $10 of risk. Now remember earlier I said that my margin is my risk. And my margin is my risk. So how much margin am I putting up to place this trade if $10 is my risk? $10. So $10, every pip worth $1. So now, Dave, yeah, it's $10. So I'm putting up $10, not $100, $10. Okay, that's all I'm putting up to place the trade, and this is to control a mini lot. So 10,000 units of currency. That's it. Versus putting up a couple $100 to actually trade the spot FX. So I'm putting up less money, and I'm making more. So the way that you know how the floor and ceiling is, they actually automatically set that. I'm going to show you that here in just a second. But it's a great question because I was like, where does it come up? And it makes a lot of sense. So I'll show you here in just 1 minute. Now, right here, what is my max profit? If I sell at $24.90, I can't make any additional money. Now, I don't lose. If it goes like down to $2,300, okay, I still am profitable. It doesn't have to stay in here, okay? So it's $90. That's my maximum profit. Okay, so $10 risk, $90 maximum profit. Not bad. You'd have to basically make a trade that's a 90 pip trade. It's so funny. Traders come in and they're like, I don't know about this whole capped risk thing. By the way, I do show you a way on our site to uncap the risk, or not uncap the risk, but uncap the profit. But 90 pips. And unless you're going in and grabbing 90 pips, over and over again, then that really should not be a big issue for you. Okay. Now, if you're buying the spread and we flip everything around, you can't lose any money below the floor, can't get stopped out, okay, so no matter how far it goes against you. Now, again, you can't make any additional money above the ceiling. Now, you could always buy, again, another spread. All right, so right here, buy it at $24.10. My floor is $2,400. I can't lose any money below the floor. What does that make my risk? Really simple math here, but if you get this, then spreads really start making sense. Okay, so exactly, my risk is $10, therefore my margin is $10. All right, by the way, the minimum amount to open up a Nadex account is only $100. Now you can see why it's only $100. There's no day trading restrictions at all like stocks. You don't have to have 25 grand in your account, and you can literally open an account and fund it with just $100. So 10 pips of risk, $10 of risk, and I can make up to $90. All right, so hopefully you're starting to see that there's definitely an opportunity. But you go in here, you buy, the market spikes right against you. You're down 10. You're down, but you're not out. And I come from, futures and forex and options trading. Those are the three main areas I trade in. And I can trade stocks. I've always hated the leverage. And with this, I'm like, wow, I can come in. I can do the same thing I like to do already, but now I can cap my risk, get better leverage, And no matter what, even if you don't have this massive no stop loss trade, you still have capped risk because some crazy things, crazy things can happen. They have happened recently. So, okay, looking on over. So you can close the spread again at any time before expiration. That's something that's very important to know. You don't have to wait. They do expire, so they'll have ones that expire all around the clock. Okay, and I have a tool that you'll be able to access to. Check it out free as well if you'll use that link that Morgan's putting up there, the apexinvesting.com/pub. If you'll use that link, you'll be able to get access to the scanner. But anyways, you can close the spread at any time. So I can buy, sell, buy, sell, just like trading forex or futures. Okay, exactly. So you can maximize your profit because obviously you don't want to put a trade on and just hold it to expiration. Very rarely will I ever do that. Okay. I mean, that may happen. Things are just going, and I'm like, okay, well, I'll put in an order right here to get out, but it'll probably expire at max on profits. It doesn't matter. But normally, I'm just going to do that. Now, what about expiration? People go, well, do I have to deal with anything? You don't have to deal with, they're not calls and puts, okay? So you're not worried about something being called away from you or put to you. You don't have to worry about the futures thing of having to make or take delivery on some sort of commodity, like saying, hey, come pick up all your cattle, right? And you don't have to deal with rollover dates, last trade dates, all that stuff. So there's a lot of things you don't have to deal with. But the nice thing is when it expires, you don't have to do anything. So let's say it expires at 10 a.m. Then what will happen is they'll take the settlement price. By the way, they don't use like last trade. That's a horrible way to settle something out. You want to use last trade. You want to use settlement. That's how CME, that's how all exchanges do it. They use a combination. So what Nadex does, they take the last 25 trades, not the last one, and they drop the bottom 5 and top 5 to get rid of the miscellaneous things or weird spikes. They average the middle 15. On Forex, they use the mark because markets can move. So if you can have such a wide bid-ask spread, you wouldn't want to use just the last trade. So use the last 25 mark quotes on FX. Okay? So there's really no analysis here on this one, but I can show you some analysis. Well, I'm actually going to try to do that here at the end and see if we can find a good trade for us. Okay? Because I see there's setups all over the place. So close at any time or let it expire. If it expires, what will happen is your risk capital will be returned to you. You never can get okay. Plus, any net PRL will be returned to you. So if you went in and you sold it and you made $50 and you put up $10, then what happens is you get your 10 plus your 50, you get $60 put back in your account within really seconds after the expiration. So you can use that money for the next trade right away. They have a lot of different markets, a lot of different time frames. They have ones that will start and go for 2 hours. They have ones that goes for actually now they have like 23 hours. And the larger the time frame is, the wider the spread. Somebody was asking earlier, where do they come up with that spread? What they do is, let's say it's 2 hours, they'll make it say 100 pips wide, and they'll put one. Let's say if it starts at 8 a.m., they'll put one 100 pips above the market, 100 pips below the market, and then they'll put them in between. So to show you what I mean on that, let's see here. Okay, we got a chart. Let me pull the chart up for you. We got dollar yen going on. And if I go in and I look at the spreads inside of Nadex, okay, so right up here, we turn off the lights on top. There we go. This on the side, and then grab this and move this over here. Okay, so if I go into the spreads on Nadex, let's say let's look at the 8 to 10 a.m. spreads. I come out here. Gotta reopen it up because they just opened. Then what you'll see is they have these spreads that are 100 pips wide, $1, right? So every tick being $1. And what they did was they put a spread above the market, 98 to 99, below the market, 98 to 97, and in between, 97.50 to 98.50. And so if I was actually drawing this on a chart, what I would do, like I said, they're like a box, okay? So I go over here, and let me just move this up here, shrink it down a little bit. I would grab a box right here, And so I have a box that's going to go till, say, 10 a.m. Okay, so that's the trade. Now I could also go and I could go short. So they're going to put one, like I said, right above where the market is. And so they started posting this. You can think about it, but the market being like right around that price. And so they put 100 pips above, 100 pips below. So you don't have to go in and combine, strikes to make foreign ceilings. You don't have to deal with any of that complexity. It's automatically done. So they have one there. They have a 98 down to 97, and then they have one that's right in between. So that way, if the market moves down, say 50 pips, you have contract you can buy. Or if it moves up 50 pips, you have a low risk contract you can sell. Okay. They're kept at $9, not $9.50. So yeah, they're 90 cents. The fees are 90 cents a contract, and they on the way in, 90 cents on the way out. If you do 10 contracts, it's $9. If you do 100 contracts, it's $9. It caps out. If let's say you put $10 risk and you lost all $10, like you went in, you let's say you bought and the thing just went down, then you wouldn't pay any fee on the settlement. Okay, so and I prefer exchange fees after somebody trading against me. So it's really good, and I love that the way it's put together. Not only are they low, there's only like I said 90 cents a contract aside, but also they're capped. So if I'm doing larger orders, the larger my order is per order, then obviously the less I'm paying. And let's see here, we got by the way, the longer they are, when we had 100 pips wide, so let's say if they're 5 hours wide, maybe they'll be a 250 pip wide bid-ask spread. Okay, so you can start trading these at night as early as 6 o'clock in the evening, and they go all the way to as late as 4:15, depending upon the market that you're trading. Okay, and here's sort of an example that shows you like what they call the master spread, which trades all day. It'll overlap sort of everything, and then it'll go in and show you like hey, there's an 8-hour spread, and notice how it's wider, okay, than the 2-hour spreads, which are narrower. So the longer it is till expiration, the wider the spreads will be. So like this being a spread, like I just drew, this being a spread, and then this being a spread. So that's where they come up with it. They look at basically the average volatility. Okay? And again, these are Nadex spreads. It's basically a much better way to trade forex and futures markets. And even if you're a stock trader, it's better than trading spiders and diamonds and IWM. You're getting a lot better leverage and a lot better risk measurement control. Now, it's a list of the markets. Like I said, they're adding in Aussie yen and Euro pound. You can already see them inside the demo platform over here. Right there, we got Euro pound, we got Aussie yen. So they're already starting to push them out there. And they'll be adding them to the spreads, and they'll launch them out live next month. Okay? So not all contracts. All contracts are not listed from 6 to 4:15. Every market has its own hours. So, but they're not that hard to figure out. Almost every contract starts at 6. I mean, Nikkei is an exception. Corn and soybeans are an exception because they're not even open to be able to trade on. And then most of them will close down on the spreads when the actual futures pit closes. So like the FX pit closes at 3, so they'll close at 3. The U.S. indices are 4:15, the international at 4, oil's at 2:30, gold's at 1:30, silver's at 1:25. On down the list. I actually have a expiration calendar, like when they stop trading, inside of our website, as long as all that other information as well. So, and so right here, anyways, one of the other things I like to show you is just the comparison. So we go here and we were looking at this pound dollar, and we were talking about going short at the beginning. And we talked about the risk being, $650, the margin being $3,000. It goes up, it spikes, it hits you, it knocks you out, and then it goes down and basically slaps you in the face. Okay, so sort of like some interesting trading this week. And what would happen if you were doing a spread? So on a spread, goes on down, 250 pip wide spread. You get in the trade. You sell 10 of them, remember, because they're each at like $1 a contract, so we're trying to equalize it to that full lot we were doing earlier. So you tell 10 at 1.5665, and which would make your risk 35 pips, points, ticks, whatever you want to call it. So 5,700 minus 5665 is 35. Every tick is worth $1. Okay, so that's $35 risk times 10 contracts equals $350 instead of $650 that we had before. Our margin is $350 instead of several $1,000s in margin we had before. Market goes up, we're down, but we're not out. It comes back down by expiration, and we're actually able to be profitable on the trade without taking on any additional risk, actually taking on less risk, and able to come in and be profitable on this trade. It expires at 5589. We end up profiting 760. The exact same trade, the exact same analysis, but we didn't get stopped out on our trade. Now, the spread versus the underline, if we put those side by side, 650 versus 350 on risk, 3,000 versus 350 on margin, 650 versus 760 on our profit. So you can definitely see there's a major benefit right there, being able to come in and reduce your risk, maximize your leverage, and have time to be right. Okay? And just so you know, you don't have to do that many. You could do one. You could put up $35 on this trade. Okay? Goes up, comes down. You profit $76. So what? You double your money, and you had massive leverage. So instead of, again, putting up, a couple $100 a contract, you only put up $35. So you can trade in smaller sizes. And one of the other really cool strategies, okay, and I know I'm going through this fast, this is new information. I'm just trying to expose it to you so that way, hey, if you're like, this interests me, I want to learn more, you hop over to our site. We have literally hundreds of hours of free education. I do all my education's free. And you come over here and we can combine them with other markets like Eurodollar, Pound Dollar, Aussie Dollar, oil, natural gas, gold, copper, futures, the S&P. You can do what you're doing right now with the Forex contracts or the commodity contracts or the indice contracts that you're currently trading, but combine them together. Okay? And what would happen is, let's say you're going to go short that Forex contract. Just, you're the pound dollar trader trading spot FX the exact same way that you trade right now, and you go short, but you buy a spread also. Remember, you have a capped risk on the spread. This gives you a really cool advantage. Think of this as options for day traders, okay? And you go in here and you buy 10 of these spreads at 57.10, okay? Now it goes all the way up to 59.50. That's the ceiling. So you're going to have to get out of Forex if it goes like 250 pips against you. So I think that's okay. That's a good exit. Your margin on the trade, because it's only 10 ticks above, and you're buying 10 of them, so $10 risk per contract, is only $100 on the margin on the spread. Flies up, comes back down, and check this out. This is sort of cool, because what we're doing is we're actually going in and we're selling. We're selling the pound dollar for $56.85. So what I'm saying is, don't change anything that you're doing right now. This is literally one way to get into this. Don't change anything you're doing right now, but combine it with the spreads. Okay? And now your risk, you sold the spot at 56.85, you bought the spread at 57.10, you have 35 pips of risk, but it's capped because it'll cap you all the way up, okay, to 59.50, meaning the spread will make what your spot Forex pair is, losing. So it's hedging you. Remember, it's making it $1 a pip on the way up, right? And the FX, I guess $10, so we got 10 of them, and the FX is losing, say, $10 a pip. So it's a very cool way just to combine the two, and your risk is the difference between where you buy and sell. And I have like 3 or 4 videos on how to do the hedge. But it's a really cool way to trade without changing anything that you're doing right now, except just adding in some insurance. Well, it goes down, and you make actually a little more money on this. You end up profiting $960. You gave up $100 on the spread because the spread lost. Who cares? And you net $860 profit. Now, what's really cool about this is Forex doesn't expire, okay? So confusing. So let me go back. If I'm going to go short the pound dollar, so let's say, Raymond, you're a pound dollar trader, okay? You're an FX trader. You could keep doing what you're doing right now. You're buying pound, you're selling pound, whatever. But now you can have something that is hedging you. So if you're not aware of hedging, you don't know what it means, then definitely hop over our site. We'll teach you more about it. But this is like buying a stock, like buying Apple and buying a put. Okay, except for you're getting a 1-to-1. So that's basically what it's doing. It's just hedging it off. Except for, again, it's 1-to-1. It's not like when you buy a put and you have to deal with like a 50 delta and all this other stuff. You're getting great, coverage on the trade. Now, one of the cool things is it doesn't expire, right? So you could be just trailing your stop. It's not like it ends at 10 o'clock or ends at 3 o'clock. You could stay inside that trade. Okay. And also, it's not capped. So, if you end up really catching a trade that just keeps going, maybe over a day or 2 or 3 days, you could stay in that trade, but you could add on a couple hedges along the way to protect profits, to also reduce risk. So, if you know anything about options, then this is definitely a way to do it. So this is an option strategy. I mean, buying a call, selling a put, married call, married put would be the terms you'd be familiar with. Also, you can do straddles. You can buy the one above and sell the one below. I do that all the time on news. So if you go in and check out, inside of our site, one of the things you'll see is I have a news trading calendar where I go in and I post all the main news events that have actual recurring statistics. So how far, especially if you're an FX trader, you'll love this. We go in, we talk about doing straddles and strangles and different markets. So definitely something you'll want to check out. But I talk about, hey, you know what? On this report for the pound retail sales that came out at 4:30 this morning, the average move on this trade, is so many pips. So I'll say the average move 71% of the time it moves, and the average move is actually 70 pips within 2 hours. I don't know what direction it's going to go, and I want to use defined risk, so I'll just buy both. I'll buy a spread above, I'll sell a spread below. As long as it moves either way, then I'll be profitable on the trade. So all I need is some movement. I don't care how much movement, I just need some movement. And some of those work out great, but a lot of them, they may break even. Very few of them lose. So the way that we teach you how to do them, they're very, very cool trades. And we have a whole section for training. If you go to news trading questions, that teaches you how to do that. So if you're ever interested in news trading, it's the coolest way to news trade, because you're like, hey, market's going to move. I know what's going to move. So that's an example of another option strategy for you. Again, repeat this a few times. The international, if you'll sign up, get a demo account. Okay, you get a demo account right now, even if you're not in the United States. Just grab a demo account. Sometime next month, international should be available. Okay, so hopefully before the end of next month, international should be available. And I'm not speaking on behalf of Nadex, just based on what I know, that's the target for the schedule. Now, to make it easy to trade these spreads, because there's a lot of choices, a lot of options. Okay, I made a tool that I use, and you can access it right now. Okay, just hop in, access it at no cost to you, check it out, and what it does, it pulls all the data in from the Nadex exchange directly into our server, okay? And it allows you to see all the spreads and have all the map. So instead of going into this platform, which is difficult to say the least, because you're going these spreads, what's my risk reward? Either you have to do the math in your head, or you have to open up each individual ticket to figure it out, and that just takes a lot of time. So myself, I hated doing that, because I trade these every day, and or just about every day. And I came in here and had this built. So I hired some programmers, and what it will do is it actually has every spread. So this one expires in 14 minutes, 74 minutes. This one expires at the end of the day at 3 o'clock. It tells you, the quotes and the prices right now. It tells you what the risk and the reward is on the contract. It tells you, the difference in the premium. So difference to break even. So this makes it really, really easy to trade. It also tells you what the ratio is. So let's say you're a futures trader and you like trading the S&P 500, or you're an oil trader, or you're a euro dollar trader, whatever. So we go in and we tell you, what the tick size is on Nadex, what the tick size is on the underlying market, what the tick values are, what Nadex contract, because Nadex is always a derivative. It's following something else. Go to apexinvesting.com/pub. Okay, and so we tell you all the markets, everything, and we tell you what to equalize it. Think about if you're an oil trader, every tick is worth $10. Well, on Nadex, every tick is worth $1. Therefore, if you want to equalize a full oil contract, you need 10 Nadex spreads to equal 1 oil contract, right? So that's a really, really cool benefit right there. And then the other thing is, think about this. Let's say you trade the Russell, okay? On the Russell, every tick is worth what? Who can tell me? I know we got some futures traders in here. What's the Russell worth per tick? $10, okay? So every time it moves, it's a $10 move, right? So if you understand that, the Russell is going to be worth, $10 a tick, and it ticks in dimes, 0.1, 0.2, 0.3, okay? If you go in and you want to, let's say, have a 20 tick stop loss, that's a $200 risk, right? And like the way that I trade, there's different ways to do risk management. The way that I like to do it is I go in and I take my account size, and I say, okay, let's say my account size is, $10,000, and I put in 0.05. I don't want to risk more than 5% a day. And if I'm trading just one market, if I'm trading more markets, I'll divide this further. If I'm trading one market, I divide that number by 6, and I should not take more than $83 in risk at a time. I have a whole strategy on risk management. Well, how in the world are you going to do that on the Russell? Because if you're trading TF, you're risking $10, right? You can't make it smaller. You can't get a mini Russell. The smallest you could maybe go to IWM and use the ETF, and you'd have to put up a fortune to do the trade, right? You have to put up tens of thousands of dollars to even equalize the trade at all. Well, on Nadex, you can go in and you can put up trades for $23, $10, $45. There's different spreads over here, and you can basically do a tenth of a Russell. So you can get your risk management really good because maybe you're doing 3, maybe you're doing 14, okay? But you can make every tick $1, therefore you can do as many or as little contracts as you want, any ratio you want to stay within your risk management. So that's one of my favorite things about Nadex is I actually get really good risk management because every tick is worth $1. I don't have to have, okay, I want to add into a position. Now I got to add in another, $10 a tick. So I could add in $1 or $2 or $3 a tick. Okay? So literally that's how it works. Let's see. So you got the spread scanner. I have a whole tutorial, by the way, when you get in there, right under it. You can check it out. It teaches you how to use it. So right here, okay? There's also the binaries and everything else. And let's see here. What else we got? Oh, another thing that's really cool is we have these what's called deviation levels, okay? We publish these every night. They're public. You can hop in and access them at 8:15. And what we do is we take what's called implied volatility. If you're an option trader, you definitely know what that means. You got to know what it means anyway. If you're the VIX, the VIX is the implied volatility reading of the S&P 500. And we extract what the market says is expected movement. Okay? So you have expected movement, and we extract that out, and we use what's called a one-day deviation formula. This isn't standard deviations. It's not pivot points. It's not based on historical data, okay? This is literally the market telling us how far the market is going to move, and they are insanely accurate. You can use them for pivots. I teach what's called a volume spike deviation reversal method that's under here, under a deviation trading system. I teach how to use this for trailing your stops. And so you could use this whether you're trading futures, whether you're trading Forex, whether you're trading Nadex, spreads, binaries, whatever it is that you're trading, you can use this. And they're just incredibly helpful. We list them, like I said, on a lot of markets. And it's amazing how accurate they are. I mean, yesterday we had a big move, right, on the S&P. Well, if I pull up the S&P, and we also have an indicator that will plot them right on your chart for you, you can see it went like right up to 1 deviation. So we had a great point. Market got exhausted at that point. So you go in and it'll help you pinpoint major turning points in the market. You can even go in, you can pull up like gold contracts, you can pull up all the different major markets here, and we plot them in. We're going to be adding in, by the way, next month, we're going to be adding in, let's see, what is it, 3,000 stocks, ETFs, and indices. With the indices, we're going to be adding in futures. We're adding in like 40 different markets on futures. So we're adding in a lot of different ones on here, but it'll help you see where these turning points are going to be. And you'll see day after day, whatever it is that you're trading, that, I mean, it'll just nail it. And it's perfect, like I said, for doing reversal trades, contrarian traders. You can see the Russell right there going right up to 1 deviation. They're very, very helpful. So anyway, so to get the indicator, just hop in on that. That's part of the known as the Elite package right there on the home page. There's a section right here that has like, trials and all that stuff. Also, we have just the deviation levels themselves. You can get access to that. So just click on these links. and you'll see a lot of information about them under here. And then we actually feed them in directly into the market. Let's see here, a couple questions. Want to go over. I want to make sure I do get anybody's questions as much as we can. Any trade size limits? There are some limits on some of the commodity contracts, like FX doesn't have limits. They're CFTC set limits. If you want to see what the limits are, just hop over to Nadex.com. They're large. I don't think you're going to have to worry about them. But go here, go to markets. Say if you go to stock indices. So just like in futures, you have actual limits. Forex doesn't have limits, by the way. Even the Forex here doesn't have limits. But you can go in and it'll show you, what the limits are on the contract. So position limit 31,250 contracts, reportable level 1562. They have to just let the CFTC know, etc. So same thing happens in futures. If you have so many futures contracts, that have to be reported by your futures. And if you go over to say, Forex markets over here, and we go to contract specs. Also, this is where you see the hours. Okay. I get that a lot. So it'll give you an hour, man. But right here we got no position limit like on FX. Okay. So obviously on any market, especially kind of options type market, you don't want to exceed the bid ask, whatever. So let's say we're over here and we're trading the S&P. There'll be I usually don't go any higher than whatever the contract amount is that's listed on here. So if there's 50, I'm probably not buying more than 50 on that specific contract. So, yep. So depending upon what your account size is, I mean, if you're talking, you have $300,000 account in JT. At a certain point, you're gonna have to diversify. But I have guys that are trading 250 contracts at a time on Nadex that have six-figure accounts that aren't having an issue. Liquidity is guaranteed by the market maker in the sense of they will post up bid and offer size. You're going to know what that size is in advance, so you don't have that. And they actually put the bid size and offer size up. I usually don't ever out trade that size. So, but depending, I mean, unless you're talking, $300,000, $400,000, $500,000 account, massive one single position, you should not have an issue. Let's see here. So it's usually one of those issues people worry about it, and I'm like, how big is your account? And they'll tell me, 500 or 5,000, or I'm like, yeah, you don't have an issue. So, and I'm not saying that to be rude, I'm saying, let's worry about the real issues. So it's sort of like people being worried about, and there's a 100 pip limit on that 2-hour FX spread. Well, what's your average take profit? Well, 30, 40 pips. Okay, so let's not worry about, limiting it 100 pips. But if you are, then just do that ultimate hedge. And just go to our forum. You don't worry about the ultimate hedge more. There's a forum right there. Type in, ultimate hedge. And you can find all sorts of stuff in this forum. So there's thousands of posts, tons of videos built in here. And under education, you go to Nadex, we walk you through all the basics. So at a much slower pace than we do on here. And let's see, downside, let's see. Everything sounds good. What's the downside? Well, in trading, Morgan put it on the money. You can lose money. So it doesn't matter what trade you're placing, you can lose money. So this is about reducing your risk, not eliminating it. It's about maximizing your leverage without having to increase your risk at the same time. You can say the downside, I guess the one downside is they are going to expire. So, at 10 or 11 or 12 or 1, they'll expire. Maybe 3 or 4 or 5, depending on which one you're choosing. But also you can eliminate that as an issue if you just use it as a hedge. So I'll go in and I'll, usually either I'm in a trade or I'm not pretty quick, right? Like it either goes in my favor or it doesn't. So I'll go in and I'll just buy a short-term spread to hedge, longer-term Forex or futures position. So if I'm worried about time, then do the hedge. But, I found more often than not that it doesn't really matter. And I can always add on another spread. So, let's see here. Let's see. The contract cost. The cost is equal to the risk. So if the risk is $20, the cost is $20. Now there is not really commissions. They're actually exchange. There's no commissions because you're going direct to the exchange, and that's 90 cents a contract, 90 cents a side. And then let's see here. Caps at $9. So if you have 100 contracts, put on 100 contract order, it's $9. So, let's see, can you scalp ES using spreads? It is easy to get filled, yes. Can you scalp it? Depends upon what you mean as scalp. So, are you talking like for a tick, or are you talking, for points? Yeah, yes, I do scalp. Actually, one of my favorite strategies, actually, if you're a scalper, it's pretty sweet. I'll go in and I'll buy, say, spreads. Let's say I'm going to scalp short. I'll buy spreads, and then I'll start shorting, like on scalps. I'll go in, I'll take like a point off, a point off, a point off on the ES contract. But just in case, because like you get in on scalps, and scalps can kill you, because man, if that thing goes against you fast, wipes you out. But if I'll put the spreads on, once I cover the cost of my spreads, then I'm scalping basically for free. And so as there's market oscillation, especially things like that, it's very easy to go in and scalp. I'll scalp the futures using the spreads as a hedge. But you can, if you want to go in for like, you're talking like 2, 3, 4, 5 points, yeah, that's no problem. Yeah, I would do the same thing that you're doing if you're only going for a few ticks, but I would actually use the spreads to hedge myself if I was doing that. I wouldn't use the spreads to get in and out for 2 or 3 ticks. This wouldn't be worth it, unless you're doing a lot of contracts. Let's see here. So liquidity, we got that one. Cost, we got that one. Elite room. The elite room actually for the first month is free with no credit card. So all you got to do is click on free trial. You get two-week free trials. You get full access to all the Apex indicators, the deviation levels. You can log into our trade room. We have multiple traders in there that'll be trading, and you'll be able to see what they're doing. And they're all starting to come online right now and go full throttle. But now at no cost instantly, and watch us go for the day. Okay. So we got some guys actually coming on. They're doing the DAX right now, and more. So more and more will pop up as the day goes by. But we usually have 4 or 5 traders, and they're all sharing their screens, which is pretty cool. So it minimizes the screens that you can open up if you're trading FX. Like one guy has like 6 FX pairs up. Another guy has 4 of the U.S. indices up. Another guy's trading the DAX. We have guys trading oil, gold, things like that. And so you can sort of see what it is and how we do it. And we got guys that are trading futures, forex, stocks, options, and Nadex. So I'd say probably at least 50% of the traders in there are trading Nadex, and then we have a mix of everything else. But the way I trade Nadex, because I'm a futures trader or a forex trader, is I trade it based on the underlying chart. So I'm just using the contract. It's like when you trade Apple, you don't look at the calls, the options, the calls and the puts to make a trade. You look at the chart, and then you go over and find the best one. And I just use a scanner for that. So anyways, I know there's a lot of information. It's really fast, but I did want to show you the way I've been trading for over a decade now, and I love trading Nadex because I love the defined risk. I love the high leverage. The same way I traded before, I trade the Apex method. I just now use it with spreads. So if you want to learn how I do it, if you want to learn more, it costs you literally absolutely nothing. And so come onto our site. We have tons of education, a lot of tools, and a bunch of free trials. And love to see you there. But I know we're trying to stay on schedule. You got a big event today, so I'm going to wrap it up and hand it on back over to Morgan.
All right, great. Thank you. Hey, thanks, Darrell. We appreciate you being here today and always being such a good partner of TradingPub. I think you're definitely in the double digits as far as speaking at TradingPub goes, and always do an outstanding job. So we greatly appreciate you being here. I know that that was probably about as good of a way to kick this thing off as anybody could have done. So thanks again for taking the time to be here. I hope you trade well today. All right, guys.